Hey guys, welcome back to lecture 5. Um, so, in this lecture, we're going to talk about something that most traders completely ignore, and that is volume. And honestly, this is one of the biggest edge that you can have. So, see, what most people are looking at is price. They're drawing trend lines, looking at candlestick patterns, watching moving averages, and all of that is fine, but they're missing half the picture. Price tells you what has happened. Volume tells you why. And when you combine both, you start to see the truth behind market moves. Okay. So now before we dive into volume, I need to introduce you to the three Wyckoff laws. These are like the conservation laws of trading. Just like physics has conservation of momentum, conservation of energy, trading has its own fundamental laws. All right. So law number one, supply versus demand. Law number two, effort versus result, cause versus effect. And law number three, effort versus result. Now we talked about supply and demand in the last lecture. That's basically support and resistance, buyers versus sellers, cause versus effect. We'll cover that more in the Wyckoff section, but today we're focusing in the third law, which is effort versus result. Okay, and this is where volume comes in. Okay, so what is effort versus result? Let me explain it with an analogy of a rocket fuel. Okay. Think of an elevator, or better yet, think of a rocket. Okay. If you want to go to the moon, you need fuel, right? The more fuel you have, the further you can go. Simple. Now, volume is the fuel of the market. It's the effort, and the price movement is the result. Okay. Now, if we see a lot of volume, that's a lot of effort. We expect a big result, meaning a big price movement. If we see a little volume, little effort, and we can expect a price of a small movement. Okay. Now, but here's what it gets interesting. Where it gets interesting, what if we see a lot of volume, but the price barely moves? That's effort without result, and something's wrong there, right? The market is telling us something. High volume plus big move is healthy. Okay. Now let me show you some examples. Okay. Like let's go ahead and see some examples. So here on this chart, what you see, um, you see candle, the volume, right? And the candle is encoded with the volume, the color of the volume. Okay. And you can see if the candle is purple candle, it's very high volume. If the candle is red, the volume or is red, then it's like ultra high volume, orange, very high volume, right? Like this. Now look at this volume spike, guys. You see this volume spike. Market moved significantly down. Big candle, right? And nice close near the low. Okay. Now this is effort and result. The sellers put in effort, right, which is volume, and they got the result, which is price moved down. Okay. Now, this is healthy for downtrend, and this is what we want to see in a downtrend. We can also go ahead and see it in the uptrend. You see this volume upside, right? We see this like big volume, right? Which I mean here it stopped, and then big volume came here, and boom, market went up, right? So this is what we are looking for when we say like high volume plus big move is healthy. Okay. Now high volume and a small move is a warning sign, uh, which is like someone is absorbing all that buying or selling. Okay, so for instance, and in the Wyckoff terms, this is called stopping volume or volume climax. Okay, when you see these, pay attention. It often makes a turning point the market is telling you that something is changing. Okay, you see like very huge volume, but small moment. Okay, so for instance, if I want to show you that example, you see here, this is big volume, but the candle is very small, right? And then the market reversed, right? You see this big volume there, here, big volume, but the candle was very small. Okay, that's reversal. Okay, so there's definitely an absorption happening there, and that it shows there is more effort but no result. Okay, so volume climax, the turning point. Now let me show you a real example of a volume climax. So in this downtrend, what you see, price is falling, and then boom, the massive volume spike. You see, and look at that bar, highest volume, right, but very less result. So what happened to the price? It stopped falling. In fact, it started reversing. Why? Because that massive volume was buyers stepping in. They absorbed all the selling, the sellers threw everything they had, and the buyers ate it up. That's the change in behavior, and that's the change in character, right? In Wyckoff terminology, this is when we start looking for a trend reversal. No, this doesn't mean you buy immediately, you wait for confirmation, but this volume signal tells you to stop looking for shorts and start watching for longs. And that's what happened. And if you want to go into more detail depth, what's going on there, I can actually show you volume footprint here. So this is the chart where it shows uh, buying and like all the volume that order that executed there. You see, uh, this is seller side, this is buyer side. Okay, and you see like there was like a lot of selling. People were selling, and then buyers stepped in, and delta was net positive. So you can actually go inside and see inside this candle, you see big selling happening there, it's 0 0. So this was your like doji formation, like in this season. And then as it came down, absorption was happening, and then market went up, right? And it closed around here, and then you can see the direction of the market there. So so this is what volume analysis does, right? Now let's move on. We already covered this. So um, now we're looking into the low volume pullback. Okay, we talked about high volume. Now, what about low volume? Low volume on a pullback is actually bullish. Now, let me show you. Okay, so low volume on uptrend. You see, as we are going up here, uh, you can see like we are going up like this. Okay, and what I want you to observe is the pullback. All right. So as we are going up, and if we see this like low volume pullback, okay, I mean like this is not okay, let me find another example, perhaps around here. So as we are going up, we can look for the low volume. Here you see the big volume, but like there wasn't any movement. This was a pullback, and after that, market went up. Okay. So this actually tells us that there's no interest in selling. Okay. And the sellers don't have conviction, they're not putting in effort. So when the pullback ends and the price resumes upward, you want to be buying that, right? So you see when I do that, and like if we go here, you can look at this, okay, and see uh, here. You see, as the market was going up, on this pullback, You see, there was selling, lot of selling effort, but all the volume got observed, and the market went, closed near the high point, right? And that's where, like, after that, market went up. And if you want more detail, you can actually put the volume point of control there. That will show you what was the volume point of control, which was this one. Okay, so yeah, market actually closed near the high. Okay, so this is one of my favorite setups: uptrend, pullback on decreasing volume, then a signal to go long. Okay, and yeah, so in the Wyckoff terms, for this is a testing. The market is testing the previous buying, and the lack of selling confirms the buyers are in control. Okay. So let me teach you how to read volume across waves. This is really powerful, guys. Instead of looking at individual bars, okay, we will be looking at the volume on up wave versus total volume on down wave. Okay. So let me show you this example. Suppose in up wave there are 9 bars going up. What we will do, we will total their volume of each candle, right, and plot that number. Okay, and we can do the same for down wave. Now, what does this tell us? More effort on the upside than the downside. Okay, now if I go here, go to this geometric trading system wave, and when you click, I want you to click on this plot wave volume. Okay, and then what we see here, this one, you see, this is up wave volume. So what it's doing, it's adding all this volume on this up wave and showing it up. And the 1.07% you see is the percentage change in the number of bars on this wave, okay, which is 1, 2, 3, 4. Okay, so you see on this up wave we have 1409 unit of volume, and actually I can go ahead and select the unit as well if I want. Um, yeah, we can do that later here. When I do volume scale factor, you see 140 units of volume, and on the downside, on the down wave, we see 84 units of volume. You see this 140, you see this 140 units of volume is greater than this one, right? And it's making higher highs. So, and on the down wave, as it's coming down, you see this volume is less than this. So this is low volume pullback, low volume. Okay, so what does this tell us is that the more effort on the upside than the downside, and demand is overcoming supply. Even from simple counting, we can deduce that the market wants to go higher. Okay, and we can do it like this. Okay, I mean, we must be doing it in forward testing mode. Okay, you can see here, as I add, we see this like big upcoming, and then on the down wave, big up wave, and then down wave 84, right? And we can see, like, when the next down wave comes and it is lesser than the previous one, then we can also enter there and, like, look for going up. And that's what happened. Okay, so the geometric wave indicator does this automatically. It calculates the volume on each wave and shows you the comparison. But I want you to understand the concept first before relying on the indicator. Okay. So the 4 practical rules that I want you to take away is: number one, always look at the volume with price. Don't just look at candles. Ask yourself, was there effort behind this move? Okay. Second, big volume with big movement is healthy. Big volume with little movement is a warning sign and something is changing there. Number three is decreasing volume on pullbacks is bullish in uptrends or bearish in downtrends. Okay, it means there is no conviction in the counter move. Okay, number four is the volume climaxes often mark turning points. When you see the biggest volume of the move is often ending. And let me show you that example. You see, uh, this volume, this volume. Compare this. 156 unit volume is the biggest on this, right? And this is actually, as we see, on the fourth rule, the volume climaxes often mark turning points. And when you see the biggest volume of the move is often ending. And I can actually show it to you. Um, if you go here, you can actually enable this. And this is the indicator voice wave volume. You can plot this one, okay? And what you see is like this is what we're talking about, right? Like adding these volumes and showing it here, adding this volume on the down wave and showing it here, and we can see this volume, right? And so this is biggest volume. So this actually shows the the ending of that move, and you can see why, because on this down wave we had more volume coming up. Okay, so the down move is complete, and if I hit play, you'll see that now the market is gonna go down. Okay, so we see this, and this is what I was talking about, guys. Right? You see this like lot of volume on the upside, but still less than that. This is less than that, so it's going down, and eventually it went down, and then it started to accumulate, right? So your assignment for this lecture is to go to the trading view. Make sure your volume indicator is visible at the bottom of your chart. Now find these three things. First, find an example of high volume with big price move. This is effort matching result, right? Second, find an example of high volume with a small price move. So high volume with a small price move. Okay, you see this high volume with a small price move, high volume with a small price move, right? Third is find an uptrend with a pullback. Look at the volume on the pullback. Is it decreasing? Yes, it is, right? You see on the pullback the volume is decreasing, on the uptrend volume is increasing, right? And that will categorize the trend. Okay, either the trend is healthy or not. Take a screenshot of it. Okay, take a screenshot of it, and you can post it and just do some assignment. All right, and start training your eye to see volume patterns. This is a skill that takes practice, but once you see it, you can't unsee it. Okay, so what's next? In the next lecture we're going to talk about trading psychology, why 90% of traders fail, and how to develop the mindset of a warrior. Because let me tell you, the battle is mostly with yourself, and once we win that battle, trading is like very simple. Okay, so I'll see you guys there. See, the truth is that now you understand that volume tells you why. Okay, price plus volume gives you complete picture. So master the volume and master the trading. So I'll see you guys in the next lecture. Thank you.